break down some stocks from a technical point of view. I mostly actually want to analyze the SPY because I have not looked at this intensely in a while. I'm going to be, I guess, simplifying all of my lines. If anything, actually, maybe I could delete like a lot of these lines and redo this. No, not the whole chart. I have way too much stuff on here, but just kind of break it down a little bit further. And I guess, yeah, I can simplify it because this looks like anarchy. Before we do that, I just want to look at the Qs. And the Dow. Where's the Dow? Yeah. Wow, they're all at pretty interesting points. This would be a good discussion if I can only talk today. So, anyway, let's look macro view on the SPY. We've been grinding up since the low of 2009. We have Corona here. We have the thing that happened in 2018, 2018. So that's really all we have, but that's the grind line on the lower end, of which I think maybe we eventually go to. But yeah, so we have that line there. Let's go to weekly candles because it looks a little bit cleaner. On the upper end of the channel from 2018, we have 1, 2, almost 3 points here. This is what I deem to be significant. I'm going to extend that to the right. So to me, this is like an upper xylophone channel where, I mean, maybe we don't have to be in this range, but probably within this to this is the range I think we should be in. We are now getting a little bit out of it. So again, this is Coronzis. This is some other trend line that, let me go back to here. I labeled this high, and I kind of wanted to hit this high and this high a little bit. Somewhere in here, this is my zone where I think the median line, obviously, but I think that's a fair line that if it gets to the market price action, I think that would be somewhat acceptable, if that's right. Maybe this line is dumb, but it also does bounce here and here for 2 weeks after Corona, so that's where the pullback happened after Corona. So, is it valid? I don't know. But for the purpose of this conversation, I'm going to keep it there as an interesting point. You can see that I have the lines. It's very subtle, but you can see I have darker lines. Like this is a dark line. That's a super valid trend line. Green is my buy zone. Lighter lines are a little bit like smaller. We can even get rid of this. Let's reset this chart. Now moving up. You can see the price action just continued to go up for how long is this? Almost a year. With really only having like 5% pullbacks here and there, which is like nothing. And then we hit 475 roughly, and then that's where we start to descend. But we can already see if we look at this. Actually, is it better in the daily candles? Wow, it's been that long already. It looks a little better in the daily candles. So before we fell, we even talked about this. We have a head and shoulders here. I mean, it's going to depend what kind of head and shoulders you're looking at, but for the most part, it literally looks like a shoulder, a head, and then a shoulder here. Head and shoulders on the... When a head and shoulders appears from a strong, like, up move, go back to here. Look, just a strong up move. This signals a reversal pattern, just because what's the price action saying? Oh, we hit here, we pulled back, we shot above, we consolidated for a little bit at a higher zone. We sold off, and then we sold off lower than the high of this, lower than the high of the one at the left shoulder, which was a strong buying point for the market. And then it shot above, it got bought back up, retested that zone, and then pulled back. So again, why is that bearish? It's because, again, think about the psychology of people buying. People are buying in a strong bull market for a year, just going straight up. It pulls back 5%, cool, people buy it up, rip it up. Then there's buying up here, but then it gets sold off, which is interesting. Usually back to a low of up here, but that's a longer, steeper drop from a percent point of view. So this is like a 9% drop. This would be like a 5, so almost a double drop. Then the market tries to buy it back up, and then people, the entire market kind of agrees in the sense that, no, we don't like this price, and this sells off. And that's surprising because we're not making a lower high or we're not making a high or low. That's the first lower high on like a bigger, broader market structure. Again, it's easy to pinpoint this in hindsight, right? However, again, you could go back to the videos. Maybe I'll leave a link in the description below, but maybe you already seen them. Like we kind of chatted about that, like to begin with, because you see a shoulder, you see a head, and you see a pullback. You don't really get that confirmation. Let's get rid of this. You don't get that confirmation until like at least the head forms, right? And then it pulls back, and then you're like, okay, okay, sorry, I'm getting ahead of myself. Or my brain is getting ahead of myself, I can't speak and think. But if you pull back, and you see that pullback with the shoulder and the head, you have two choices, or the market's got, I guess, three choices, obviously. Or at any given time, the market's got three choices. It's going to go up, down, or consolidate. If it pulls back to a point, the odds are it bounces is pretty high. Like, that would be my bet. So, it actually slipped below, but then got bought right back up. So that's it. In essence, it did get bought up. When it hits this inflection point of the other shoulder, then you have another decision. The market's either going to go down from here or go up. It's not going to consolidate. I mean, it can, obviously, but the probability that it consolidates is very, very low because it's at a critical market zone. So the market here shot above, which is even worse because this is saying that the market actually bought it up higher here and then got sold off in the same week, showing just again the mindset that people don't want to buy at these prices in that given time period. So what I'm trying to like, I guess, say here is, obviously hindsight's 2020, like I mentioned that before, but it's like, how do you know when a pattern develops? Because people on the internet be like, oh, there it is, it's right there, you see, it's the pattern. But the most important thing is identifying the probability of the pattern developing before it obviously happens, but also placing your bets in a sense, or placing your, or getting in the thought process of, okay, what decisions do I have? Am I going to take this trade or play? Is this a valid pattern? The questions that you ask yourself at certain inflection points with the data, I guess the timing of the data, is the most important part. And it's obviously hard. You can't really, not that we can't wait, it's hard to, I guess, describe or show because it's imperfect data. But that's why these videos I think are cool, because we can talk about stuff like this and see if it develops or not. And this actually did develop, which is fascinating. Moving on from the long but very, very important tangent of the Head and Shoulders, we didn't even discuss the volume along with it as well, which, I mean, after this volume spike here confirmed the market shift in the sentiment because of the amount of volume into the downward move. But I'm just trying to scan for one thing interesting actually. So just looking at the volume. So remember, from here to here, we're just going straight up. So from here to here, we're going straight up. So we got some big green volume spikes, but big red, big red, big red. You know, big green, 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 big red, small green, 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 big red. In comparison to the weeks around it, so for this entire month, the week that it sold off is actually massive amounts of volume. Red. So just in this whole entire thing here, right? Look at those massive red spikes relative to the green. It's just interesting. I mean, again, the market went up a lot. So in that time period, it went up like 20%. But you can already kind of see that volume was drying up. So why is volume important? Because that's the amount of transactions that took place at that given price level. If only 2 transactions took place and the stock went up 100%, is that really that valid of a price movement? I would say not. Obviously, depends on the asset, but this is the SPY. This is a very liquid asset. And you're telling me that on the days that the market's going up, not a lot of people are buying, but on the days that people are selling, the days that the market's going down, a lot of volume is taking place, so a lot more transactions or a lot more people are getting interested in selling. Again, it's subjective on how you want to interpret it, but yeah, again, I'm not a a millionaire in this. I feel like I should make that point out. I just like looking at data. It's pretty fun and stuff, but I'm pretty risk adverse relative to, I guess, or our generation of people. But yeah, moving on. Hopefully that made some good sense. So now what happened after that? Oh, I never knew I could do that. What happened after this downward move? Again, these are weekly candles. Every week represents, or every candle represents an entire week of price action. So this grind line was pretty important. So this was taking place from December 2020 to basically December, a whole year later, December 2021. December 20 to, yeah, basically December, 2021, a whole year. This was a pretty valid trend line. Every time it came back to here, roughly a 5% pullback, it bounced at this line. You can see by the candle wicks here, people bought and supported the price. Through this entire time, the market was never really 5% off this grind line until mid-January, where you have this. That is a very bearish candle, especially out of a trend line. That's why it's significant too, because this is, the market opened on Monday, this day, and the entire week it just got sold off to Friday at the close. Nobody really wanted to buy the entire week. If we were to go back to daily candles, it would tell a little bit different story, but I want to look at more macro view stuff. Let me get a nice little sip of tea. Okay, so market then bounced at this zone here. This was at the 425, 430 level. And then it immediately, the next week, got sold off at 450. Again, identifying important psychological zones. 450 was definitely a zone. 425 for me was a zone. That's why I had my line down here. But 430 ended up being the zone because of the price action from January 2021. So at this stage in the analysis, let's get rid of the volume. We don't really need it for now. At this stage in the analysis, I think I started identifying the head and shoulders about here. I don't actually remember, obviously, but it was somewhere here because I was like, wait, there's a head, there's a shoulder, sorry, there's a shoulder, there's a head. Now, again, my decisions here are the market can go down and then it's not head and shoulders. It can go up and then it would, this moment right here, this moment right here, that is the point where, as I guess, maybe not a trader, but as a market spectator, watcher, you kind of, and this obviously is very important if you're invested in any asset, because this is the SPY, this is like the God market of the God markets. If this goes down, most likely your other assets will go down. At this point, it's like, okay, what's going on here? This, you can either go up and confirm it not head and shoulders, or it goes down, and then it probably is. Obviously, anything can happen in between, but yeah, I mean, it just looks so good. Also to note, though, actually, let's go to here really quick. Also to note, though, again, the key thing is we were already super extended on, like, massive time frames. I want to check this again. Oh, wow. Wait, what? Did I do this right? 2 standard deviations. 2 or 2. Is it 3? Oh, it is 3. Alright, 3 standard deviations. We're not in 3 standard deviations, so that's good. Again, standard deviation zones, what does it mean? If I take every data point I have and I plot it, what's the probability, what confidence, to me, this is like literally one of the most important things or pieces of data from a technical perspective that I can look at, especially when I was looking at it when the market was up here, when the market was in like the 4,000 area, but the SPY was in like the 450. It just doesn't make sense. Again, what does this mean? If I plotted every data point from the Great Depression of the SPY on a monthly time frame, and I put a 3 standard deviation zone on the data, which means I can be 99.6% confident that the true value the stock market should be today is within this and this. Like I can literally have 99 99.6% confident that it's in that zone, which is something that from a statistician point of view you would very rarely want that type of confidence, because usually you do the 2 standard deviation. Can I just like copy this? Perfect. What the heck? Sure. Nice, it worked. Oh wait, it actually did it. Is that right? Yeah, okay, let me change that though. Let's go back to here, change the color to green, which is better. Wait, what? Oh, okay, I gotta change the other one to green too. Where is it? The middle line. Oh, we don't want the middle line though, right? Green, green. However, I can have 96.5, is that right? 96%. I think it's 96, I keep forgetting. It's 95% confidence, I'm dumb. I can have 95% confidence that the actual value of the stock market should be between about here to here. Obviously it can't be negative, so that makes the range even better from a trading point of view. And obviously it's probably not going to go to 0. It might not even go to 1,000, so I can even tighten that range. The point I'm making is the market is very, very expensive from a technical, statistical point of view. And obviously things change. There's a lot of things that this data or this analysis isn't taken into a place, but like if you were given like any piece of data and you're like, I need to make a confidence level on it, you're obviously, you want to pick the highest, or sorry, I guess the explanation I'm trying to say is, if you wanted the accuracy of picking the right number with the most limited number of, or the tightest range, you would go with a 95% confidence because it gives you the highest, like, percentage, 95% confidence. That's very high. That's a 5% chance you're probably wrong. And it gives you a much tighter range. Look at this range. Like, that's pretty tight. If you do a 99.6, which is 3 standard deviations, it's a 0.4% chance you're, 0.04 chance you're wrong, something like that, 0.4. But the downside of that is your range is much larger, so it's in a sense almost probably a little bit more or less accurate. But yeah, to me this is so important. Like, I know I probably am rambling way too much on this, but, and we've already discussed it multiple times, but I just think it's so important. We are still super expensive, statistically, what do you call it, statistically, but, what did I click on? But, it doesn't matter. I don't know. That's the thing. Yeah, again, you gotta ask the questions. Does this matter? I don't know. But to me, I'm gonna hold some weight onto it. I'm obviously still investing. I have like very limited cash right now in the portfolio, but I can beef it up a little bit. But again, yeah, I don't know if the market's overvalued or not, but I'm definitely being cautious because of what I'm looking at, especially because that standard deviation zone. Anyway, getting down to this, recognizing that 410 is a good level. I thought 400 would be the level right here, but it doesn't seem like much is going on in this 400 range. So 410 is the level of significance. So let's look at what actually is happening now. So we have the high here. We have, and now we have a zone here where it looks like it's breaking out, but let's identify it a little bit further or break it down. Here's my upper channel, the xylophone pattern. One thing to note though is we pulled back to 375 roughly, which is right here, so significant number, sort of. I thought we'd pull back to here at least, but we didn't, which is interesting. So, what am I going to say here? We pull back. Now, the interesting thing is, after this pullback, usually you pull back up to a resistance area, and you either pull back a little bit and break above, but this just shot right above, and to me this is a big resistance now, because we dropped below it. It was a potential support, or I guess it did for like a month hold above it, but, so, not only do we have this resistance here, we have the 410 that now it should act as a resistance because of back here. The fact that the market actually shot above here is fascinating. Let's get rid of these, because these, I mean, those are just my like little predictions, but one line I also want to draw is this high to here. I mean, this could have been a very steep line, right? This actually would have been valid some time ago, but What I'm interested in is this interaction up here and also trying to grab this one. It would look something like that, but that's way too steep. So now this is a decision. Do I want this line or do I want this line? To me, this line doesn't make that much sense, but I like it better than this line. So this line, we got this, we have maybe a poke above here and it spills over, we got a retest sort of here, retest here. Now we have this, drawing this line signals that this is probably a breakout. If I draw this line, it signals that we still have some more time. So it depends on what we want to look at and how we want to analyze it. I feel like this line looks good, but it's coincidental. It's coincidental here because this is, what do you call it? Already a resistance. So it doesn't, I don't know. Same thing here. Coincidental. The only point is that's really valid for me is here and here. To me, it looks too coincidental almost. Also, look at this lack of volume the last 3 weeks of lower volume in general. Look at all that green. Sorry, all that red volume. What are we doing though? We're pushing up out of a two resistance zone. One massive one and one psychological one that also acted as a technical one. Now that's the thing though, like, if this had big volume moving out of this resistance or into this resistance, I think the confidence would be much higher that this was a breakout to the upside. Because we are still in a very high market, you know, again, we are very high. We're in this channel, we needed a pullback, a breakout, I guess, what's the opposite of a pullback? Whatever that is, we needed that eventually, so we had a 10% move up. Because we were down like 25% almost. So it's not uncommon for that to happen. But the lack of volume further confirms to me that there's not as much interest. People are just bidding it up. They're not necessarily the flow of actual people and shares isn't as high. So in a sense, maybe it's false. So is it a bear trap or a bull trap? I think a bull trap. That's my bet. Okay. This might go higher. And obviously, it probably, since we're at this zone, we'll probably go up to 220, 230. Sorry, 430. I think we do this, and then we do this, maybe this, and then this. That's my bet. Again, as of right now with the data I'm looking at. But, I mean, these candles look great. This is a nice, beefy candle. But, again, an interesting note, too, so let's actually go to dailies. So, Friday, where are you? This is Friday. This is Friday. 1, 2, 3, 4, 5. This is Friday, question mark. On the Fridays, we keep ending kind of good. I mean, I guess we can more easily see that in a week this day, but Friday was good. Good Friday, decent Friday. Good Friday, bad Friday. So, is it just coincidental that Fridays have been pretty good for the market, and that's why these 3 candles, or 4 candles, 5 candles in specific would look nice? I don't know, but low volume, actually pretty not that bad volume, even though it's red, this is still a pretty bullish candle. That's why you gotta dive down a little bit further. But low volume, this is a pretty bearish candle, and same thing with this one. Massive volume, like almost 2 times the amount of volume on this candle than this one. Like, from here to here, the last 30 days, massive amounts of selling on the day, especially the days that obviously it goes down. I mean, actually, we don't even need to say that because you can clearly see these massive amounts of selling, but the volume on the selling days further confirms that the price because of the amount of transactions taking place. These volumes, but like this volume is massive, and that's a bullish, and it's especially at a support level, which is great. But like, where are these candles, or even are these volume days? This moving into a huge resistance point and breaking out is not. If you're long the market, I don't think that's a good sign per se. Again, I've been wrong before, but just like we're breaking out of this huge upper channel. But look at that volume, like even fading volume into the move. Or I mean, again, look at the contrary. As we're going down, look, volume, big volume, bigger volume, bigger volume, massive volume. Then we start scaling back as we approach the resistance, where people, I guess, get less interested in buying. Then we have decent volume buying, small buying, or small selling, a lot of selling. Actually, this is a really bad candle. I'm surprised it actually shot above here. Let's go to the Dow really quick. Dow, we're at the upper channel, and it hasn't broken out. Interesting, different. Wow, what happened this day? The government, they're buying here or something. But yeah, we're not on the Dow, we're not breaking out, and look how bad that volume looks. Again, just look at this. If I told you that, I mean, again, it's not a one-to-one correlation, but if I told you that the higher the volume of the color, roughly speaking, is the direction that the market is behaving or wants to behave. If I see this, I see, wow, a lot of red, a lot of high reds, a little bit of green. Here I see, wow, massive green. Massive green, massive green, massive green. So, I mean, I guess here, if I didn't have this data, I'd be like, okay, maybe it's looking pretty good, like we're buying. But then a lot of red, and then very little green as we're poking up to here, so. Anyway, wow, I talked a lot, rambled a lot. Didn't even touch the uranium market, but man, uranium market's looking spicy. Actually, real quick, oh wow, oil's going down. Gold, man, different beast. Silver, oh, that's bad. That is not a good candle last week. We needed that to break above. But yeah, any last words with this? I'm not saying we're going down to this line. I think, eventually, within my lifetime, we will. Maybe even go lower, but if it were to poke here, it'd probably go above. Or hold at least for a month or so. I kind of wanted to make this like a beginner video, but I kind of get too into my thoughts, and yeah, I guess I just gotta go with the mindset before I start making the video that this is going to be a simple discussion. But yeah, I think that's all I had to say about the SPY. I think a push up to 430s probably gonna happen. I don't think it goes very high. Maybe we go up to 450, but I don't think we're just gonna go up. Actually, the probability of what I think is gonna happen is eventually within the next month or so, gonna retest this line from the downward side, and then attempt to go back up and hold, but we're just gonna fall. I think we go back to this line. 350 to 375, highly probable in my opinion. Thanks for watching.